The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, Peak D in the 120-minute E-mini, and we're getting a pullback from the high of 1933.50. 1933.50 from 1802.50 a week ago. Unbelievable move. But wait a minute, unbelievable move? It looks to me like if you do your Chapman wave cup formation with the left side, right side price time match, we went there in just a slightly shorter time period. But in fact, it's just a plain old cup formation that's turning into an arch formation. So it's really fascinating when we look at these particular patterns. Remember, only in a crash phase, and that doesn't matter whether it's a 1-minute chart or a monthly chart that you're looking at, is that acceleration down where you look back and you say, oh my goodness, it just took out 5 or 10 or sometimes even more bars on the left because of that big move. But it sometimes does that on the upside. We've had rocket ships to the upside as well. So what's the point? The point is that at a peak D in the Chapman wave methodology, that's where you can expect some kind of let's call it in this particular instance, some kind of a digestive phase after such a very big move to the upside in a pretty short time period. And we didn't do anything about this. We're just preparing that. I raised stops on our positions, all our long positions. And what's really quite important at this particular stage is what is the VIX, the volatility index, and what is the what are those 4 key metrics? Bondi, Goldie, VIXie, and who am I missing? Dolly. The dollar, bonds, the volatility index, and gold. What are they doing at this particular point? So here we go. The Dow is down. It was up earlier about 30-something points. Now it's down 38 points. Actually, I must go through this slowly. I'm going to sneeze. Look at the chart. Excuse me. Now, let's just look at this quickly. This is what I show my subscribers. And what I had said was, for today's morning update, I'd said outstanding rebound continues. The question whether this is just a sharp oversold bounce or a new buy mode, that's really the question. The answer has to do with how, if, when the 17,090s resistance at the 200-period exponential moving average is still quite a way. I mean, we're talking about 600 points, right? Do we get there? And if we get there, how do we get there? And if we do get there, what are the components within each sector that are really doing well? Do we have new leadership? Is there old leadership that's just bouncing? There are a whole bunch of questions. Most importantly, what we're anticipating based on this dash trend line resistance Chapman wave inside wedge going towards a high of 16,510 between now and the 23rd. That's in about a week's time. What's the date? The 18th? Yeah, less than a week. Next Tuesday, I believe. What we're looking at is we already today went to 16,511. That is less than a point above the 16,510 of a peak C. Now what happens is, this is so fascinating. Remember, we were looking at the pattern that said you can go from a lowercase h to a lowercase m formation. Well, I'll get into that in a moment, but what I really wanted to show was that this is a resistance area. You see, all the way to this candle right here, the candle of the 12th of January at 16,591.35. So at any point here, we can get to arch formations, the second arch formation that goes to a lowercase m. Now, what's important is we've got 2 Chapman wave Roman candles at the base of the 20th of January, and then was it the 11th? Yeah, the 11th of February with a slightly higher high. And that says that we should rally and we should rally, and this is the Dow, to at least the previous high. If we close substantially above that high, even if it becomes a new leg up, in other words, right now it gets an alternate count, D/A. Why do I even think that it could be an A? Because the MACD's bounced extremely well. It deflected higher. Stochastic has gone all the way to 66% after being as low as, that wouldn't be correct, would it? Being as low as, we're looking at that moving, yeah, as low as 27. So this is very important. This is pretty good action. Now, what's even more important is that we're way above the 9-period exponential moving average, and based on the very short-term parameters that we were looking at, yes, we're expecting a pullback right here, but I think it's going to be, now this is going to be the issue. Is this a takeoff phase like other takeoff phase that I was discussing yesterday? Look at this candle here. Look at the way it wormed its way higher around that 9-period moving average, the 200-period moving average. That orange is way up there, but the 9-period moving average is very important. And you can even see a little dashed line underneath it, which is a slightly shorter moving average. Now, what's really important is that that dashed line went above and then below the 9-period moving average. And right now it's showing support, but it's also saying just temporarily you've got some kind of a pullback coming. That's exactly what we're seeing. Really important that you have these breathing phases. If this, though, is a takeoff phase, and what do I mean by a takeoff phase? I mean a takeoff phase where you see more white candles and black candles, and you go from a peak A to a B to a C to a D. Now, technically, this should be called a D in the Chapman wave. We didn't break the previous low. But there are times where we can have an alternate count based on the fact that you almost gave back everything. You've made the H pattern with a successful test, but you did give back a big chunk of the rally. So in the meantime, all we have to do is say, nothing to see here, folks. Just move along. This is a leg. I'm calling it a D, but it's probably going to be an A. If there is a minor pullback of less than 1 day, maximum a day and a half, and the second day you want to start seeing a move to the upside to test the previous high, in this case 16,511.84. Okay, enough with this. Where does it break down? Underneath the 9-period exponential moving average of 16,190. A close below it says, uh-oh, H pattern goes to an M pattern. You're just going to bounce around in this particular formation for a while. Now, I had a couple of questions over the last week or two because I do so much work with so many different indices that some people use the volatility index as intraday trading. And they've said, just like people have said to me, why could you use the futures? Could you give us trades on the futures? Man, I tell you, I do so much work. If I was to now give you the trades on the futures, I'd have to follow that. And there are people that do that as a full-time job. I mean, I trade it, but it would be very difficult for me to add that to my work. Once in a while, I'll say you can buy it here, but mostly I give you the parameters, very clear parameters. Where is my... There we go. I didn't even run the numbers, and we've got a break coming up. So let me do this right this moment. I'm going to do this right here. I'm going to say to you that the Dow, as we're going to the break, the Dow is down 25 points at 16,426. S&P's down 7 to 1918.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, folks, let's do this. We're back, and before I run out of time, and we've got the oil inventory report coming out soon. Let's just run these numbers carefully. The E-mini has just done a very nice inverted V-shaped pattern. It's the Eiffel Tower formation, straight up, straight down, and now it's very important that this whole area in the 61.8% retracement area, right there at 1.913. So 1913, that's the area that really should hold, because if that gets taken out, you could see a dip all the way down to 1908 over the next day or two. But this is a very important digestive day. I don't find it a big deal at all, especially since we made a new high. That means we could have maybe a dip even into Friday and then start again on the upside Monday. That's the way I'm thinking about it. So let's get out of that and we'll run these numbers again. So the Dow, I'd like to do this with the charts because I want to do everything very, very clearly. So here we go. Dow, INDU, I've got the 120-minute charts, wrong one. INDU, I always forget that it doesn't automatically go to the new charts. There we go. So the Dow's made a new recovery high. It's had a fabulous move from 15,503 just on the second. That was on, what was it, Thursday? Wait, let's go backwards. Thursday, Wednesday, Tuesday, Monday holiday, so that was Friday. Yep. Thursday. So this is very important. In 1 week, we actually switched from the short position last Friday to the very long position. And we've got two positions now because we also picked up another one the next day. And that's had a really spectacular move. You can't anticipate anything else but some kind of a pullback here. A digestive phase is really important. So the Dow should hold the 16,370, 350 if there's a further sell-off. You've got 9-period moving average support at 16,307 and the 200-period moving average crossing right there. I don't think it's going to be that deep. I think the fooler here is that there are a lot of people now that have just missed, and they're going to want to be getting in. So you could see an acceleration later in the day if the selling persists all day. My thinking here is that it shouldn't be more than one. Remember my rule of 136, one in a bull phase or a bear phase, one day of rest to make a peak, and then you start in the next move up. That's kind of perfect. If you have 3 days, there's nothing wrong with that. That's also very good. It's not as momentum. It doesn't have as much momentum as a turbocharged single day of rest and then one day down, and then you move up. But most importantly, what we're looking at here is that the Dow is acting very, very well. But that 9-period moving average, you already want to see this Dow in the 16,590s to 16,630s and holding there. That to me would be very positive action rather than having this as a bear market spike to the upside, short covering. I think there's a little bit more going on than that right now. The S&P, SPX.X, let's just do that. Same thing. It's had a fabulous move from 810 to the high of yesterday. It hasn't taken out that high of 1930.68. Hey, but still a 120-point move. That's fantastic. And what we're looking at here is that it hasn't gone close to the 1930 level of the 9-period moving average in the weekly, but still nice action. Nothing to complain about here after what we went through 2 weeks ago. This is really not too bad. Question about what about 6 days, Basil? Then it's a shallow rally. Yeah, 6 days consolidation. If it takes 6 days, there's something else that's going on, and you can expect that on the 6th breaking to a new recovery high or a new recovery low or unrecovery low to the downside would be saying that you've basically restarted. And you have to think of it as fresh. The best on a bull or a bear move is just to have a very brief trough or an extension to the downside or an intraday consolidation and then continue on your merry way as if nothing happened. That's the best thing that could happen. So what we need now, if there's no new high today in the S&P, is you want to break 1930.68 tomorrow or at the latest on Monday. Okay, so let's go to the QQQ series, the NDX 100. And here what we're looking at is also a new recovery high today, another peak, a leg B. And to make a peak B, it means that tomorrow it'll have to be a weak session with no new recovery high. You've got the at 101.68, it's down 82 cents. You know, as a swing trader, if you got out somewhere around here, there's no problem, because it's pulled back enough for you to be able to take your profits and get back in. Getting back in is not going to be easy. I don't think it's going to be easy. It's either going to be a little deeper, and you're going to say, oh, no, I have to wait, and then suddenly there's a spike to the upside, or it'll just spike to the upside without waiting. And that's the difficulty here, is that if we have an intraday pullback, and later in the session, at 10 minutes past 3, the Dow is suddenly up 35 points. The S&P, instead of being weaker than the Dow is up down 0.31. S&P is down 0.54. The QQQ is down 0.84. If all of a sudden the Dow is leading to the upside, it could drag the others up. So that's what you want to be careful of. But the 120-minute chart in the Qs hit right there in the 200-period moving average. The 200-period moving average is at 102.35, and it went slightly higher today, went to 102.84, and now it's at 101.68. So 101.04 is the 9-period moving average support in the 120-minute chart. And let's go on. IWM at 99.84. It's in leg A, possibly a peak A today. Stochastic and MACD moving up nicely. The weekly chart in all time frames, they still need a lot of work. And the IWM weekly chart says, oh man, there's nothing really bullish about this or the monthly chart yet. So this is just a counter trend bounce. And because it's the IWM, and because the IWM in a sense has been leading us to the downside as it did to the upside earlier in 2015, I have to respect that and say, okay, we're treating this as a counter trend bounce. I think it's going to go higher than people think, and then we are going to come back. The retest is going to be the most important thing. We should be, technically, you should be retesting the lows that were just made between Dow 15,505 to 15,450, and then the next low is 15,370, the August low. So that should be done in sometime, maybe late February, early March. We'll see. So here we go. Gold. Now, I'm really impressed with gold's action. I'm really sorry that we got stopped out of a fabulous position in one of the smaller gold companies. It was a nice, I'm not going to complain, it was a very nice gain. But wow, if we were holding it still, it would be really much, much better. And I haven't been able to get back in. It hasn't pulled back. Look at the way gold has held the 9-period moving average. Now it's kind of walking the 9-period moving average with the MACD still good and the Stochastic pulling back quite sharply, actually, from the 90, well, I think they went to 95%, from 96% on the 10th of February, now down to 72%. So you can expect that there's actually what's happening here is a rectangle formation, and it says within this context, gold could hold quite nicely, have maybe a retest of the 12, it's at 1217. Up 6. It could even get to the 1242 area. If it does that, it might even retest the previous high. This is a continuous contract, so that's the high of the 11th. I've got 1263.90. But in this case, I'm just thinking there's a nice counter-trend rally. The dollar at this particular point is walking the line EMA, but it's not showing incredible strength. It's just showing that it's holding okay. The way it looks, I think gold will come, dollar will come down, and gold will go a little higher. Gosh, we've done most of the indices. Haven't done copper, haven't done bonds. I'll be back and we'll do that. We've got Scott in Safety Harbor. Scott, I'll be right with you in a moment.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. And just before we get anything else, I completely forgot. Within a minute, we're getting the crude oil. The United States Oil Fund LP is trading at 8.81, up 3 cents. Yesterday, we had Greg on, and it was at 8.77. It ran all the way this morning to $9.07. And we're about to get the report, and the report's about to go 10, 9, 8, 7, 6, 5, 4, somewhere around here. Anybody got a report coming out. I can't see anything happening. 880, 881, 881. It's holding. And I'm going to go to Scott in a moment. I just want to see what's going on here, because we want to see, because the recommendation was to take something off using a trading stop, keep the rest, because so far it had acted so well, and the markets are moving up. It should be moving up as well. Let's see. Okay, CX trading now at 880, 879, 870. Oops, 80, 70, 9, 80. Okay, well, we'll just have to see what it is. Oh, it isn't spiking up, but it isn't spiking down just yet. All right, so we'll be back. We'll talk about that in a moment. We've already got that particular trade for Greg has worked out so far quite nicely. Let's go to Scott in Safety Harbor. Scott, how are you?
You can only imagine.
Are we looking at CX or AA today?
Well, I like to look at both if possible, but I mean, I'm so excited, as you can imagine, about Alcoa yesterday. And the same phenomenon happened as, you've been speaking to me now for almost 2 years, and every time I'm onto something, I try to tell the people that I know that are traders and family and friends and so forth. But when they call me, Basil? They call me yesterday when it's already up at 840, 850. It's headed, and they get into it there.
Oh, that's different.
What is the psychology? And you know this to be true. I mean, I have a relationship with someone at TD, and they'll tell you that days like yesterday, that's when people are opening new accounts. It makes
really?
no sense to me.
Well, I'm going to make a suggestion, Scott, and the suggestion really is you've done extremely well based on what you do and the techniques that you have. I've found that certainly with friends, I actually try to avoid. I used to be able to do some things, and now I avoid saying almost anything about the market. I just say, yeah, it's choppy. you absolutely can't go wrong,
right,
but just saying it's choppy.
I think you're correct. That's what I should do.
Let me just explain why. Because if I say to someone, I think the market is going down, be careful. Well, it could go down, but by the time I see them, it could have gone down a lot and then rallied a lot, and they still holding the down position. Right. So I decided a long time ago, it's just better not to have, if you're going to give advice, you got to give advice, you better follow it up. But if you aren't able to follow it up, it's just better not to say anything, because people tend to do the wrong thing at the wrong time because they're not following it. It's not their ideas, it's your ideas. And this is what I remember when I used to teach music. I was a clarinetist, and when I gave clarinet lessons, and someone played a phrase and then looked at me as if to say, so how was that? I look at them with the same basset horn quizzical look and say, how was that? Because they are playing the piece. It's their interpretation. They should turn around and say to me, how did you enjoy my interpretation? So that's the same thing here, that you can give ideas. There's nothing wrong with giving ideas, but people tend to take it at the wrong time, or sometimes they misinterpret, or sometimes what happens is they take whatever you said, but they aren't able to follow up.
It exactly. And, they execute it. It's like giving directions and only doing half of what the person told you to.
Right, or ingredients for baking or making, and you forget one, or you give everything, but then you forgot to say that you got to hold it for at 400 degrees for 30 minutes. So I'm going to suggest to you that it's not for you to get frustrated if other people aren't taking it, because sometimes they might take it and they might take it at the wrong time. Suddenly it's your responsibility when in fact you were just trying to be helpful.
Yeah,
so just
right.
Be careful with that. That's all I'm going to say.
Right. You're right.
So now what I want you to do is to say to you, CX, the move yesterday and the move today didn't actually take out. CX, folks, is CMAX SA. You'll tell me about 10 times and I'll forget about 12 times. What do they do again?
Largest concrete company in North America.
What else could it be? It's right. And it's actually, if I was looking at this, I would say today, instead of being down 23 cents at 503 after a fabulous 3 days, hitting 535, it did not go to 543. It's days young, but it just has gone to 543, which is what you need for leg C to the upside. So this choppiness is not a negative, but it's saying that the rule of mine, the 136, it's not participating. And you can see by this rule of 136, look here, 1, 2, 3, 4, 5, 6, and 7. And then it took 8 to break out from that high that it made at peak A on the 22nd. Well, when it broke out, yes, it was very sharp, but look, it gave it all back and it came all the way down from the 542 level. Within 4 days, it was back at 408. Percentage-wise, that is a monster decline. And then it had a monster move up. And yet it's so I think it's in the category right now of struggling. Because it's in the category of struggling, these quick moves that you're in and then you take your profits. I remember we discussed that in this phase. I think that's absolutely, it's fabulous to be able to do it. Not only that, it's great to be choosing a stock like CX, trading at 503, down 23 cents today, like a stock that has these volatile moves after sitting quietly for a moment and having, see, the reason why I wanted to be buying Alcoa on a dip yesterday, we failed to get it. Today I said we're just going to stand by because it's making a leg D. If it's a peak D, you could find a sudden quick drop in Alcoa from the high that it made at peak D yesterday of 860. It could quite easily pull back to the 793 9-period moving average or even 782. So now it's getting a little riskier for the smaller, more volatile, old cycle, heavy-duty stocks like in Alcoa. So now I'm going to say to you, now you've got to be a little bit more careful, and I think that your entry points are going to be such that, remember what I said before, that I want to not buy the dip, I want to buy the rise.
Right.
And that's the same thing here. I would not be trying to grab the bottom. I'd wait for it to form something that looks like a bottom. As soon as it moves up, you can start your position, and if it's successful, and it goes halfway into the previous red candle, you might even want to add a little bit more. But I'd rather be doing that than adding to a down move in any of these very heavy-duty, low-priced.
Yeah, I agree. And, it's on its third or fourth day of moving up. So it's a healthy thing to settle down and drop down a bit. I mean, people think it should go up every day. That would be...
Yeah, that'd be crazy. You can't expect that, right? So congratulations. I think you've played it beautifully. And just remember, the best thing is, if you want to give someone advice, you're going to actually give them the entry and the exit. Otherwise, it's not going to work.
You can't win. Next week, I'm working on Gilead. I'll talk to you then.
Oh, good. I think you're ready for that. Okay. Thanks for calling, Scott. Have a great weekend. We'll be back, folks. Dow down 30. S&P down 6. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. Why is that not working? Let's see. Open. I'm trying to open up my very own, introducing the Chapman Wave methodology. Oh, I know what it is. No, it's not. Something's wrong. Okay. Let me try it again. I want to do this because I want you to show something. Hey. Oh, cap lock. Yeah, that's what I thought was a problem. I'm looking at this and I'm saying, impossible. How many times can you put in your password when you know it's right? Well, it wasn't right because I had the caps on. Okay, introducing the Chapman Wave methodology by Basil Chapman. This is my CD introducing the Chapman Wave methodology. There's a pattern here that I wanted to discuss, and I believe that that is on chapter 17, right? Yep. So the H pattern, the lowercase h pattern. What's really important about this is that within the context of a market coming down, you will find that there are rallies that fail, and if they take out the left side low bar, it goes even lower. Well, that can go on until there's a certain point where it actually turns into a lowercase h. There's the lowercase h right there to there. And then that H becomes a lowercase m. So let's look at an example. I had a question about Solar City. Where would be a good entry for Solar City? A good entry would probably be in a climate, the right kind of climate, where you, and you don't need, you can't have too many trees around, and you want to have a lot of sun, and that would be a good entry. An entry on the price, on the stock itself, Solar City Corporation trading at 19.70, minus 1.07. Look at all these H patterns. Look at this monthly. It goes to a peak T almost at 90. It comes all the way back down to about the 46 area. It rallies all the way almost up to 80, and then it comes back and makes an H. So it goes down, makes the arch formation for a lowercase h, makes another lowercase h, and then finally it takes out this incredible support that it held for so long, fooling everybody in the 45s back in, let's see, that was in May of 2014, 45s again in October of 2014, January of 2015, 46s in the March of 2000, and plop, it makes a rally and comes back down again. Then what does it do? It has another spike to the upside with an H. Well, it's not really an H. It's almost the Eiffel Tower, straight up, straight down, and then it breaks that and breaks the 200-period moving average support. Where would I buy this? To tell you the truth, I've looked at this over the years, not that many years, maybe a couple of years now, a few years, and I just don't see anything there. And I know that they have a really good business model in the sense that they've got cities paying for it. I know here in Newton, there were kids walking around with pamphlets saying, we can give you a free estimate and all that. Your house is perfect for solar. Call us and we can give you all this information. And it was Solar City that had the contract, I guess. This is like door-to-door salesmen, and they did it in this area. I think they did okay. I don't know if they did great, but they did okay. Newton, Mass. A lot of trees. We call the Garden City, not for no reason. It's because we have lots of trees. It's very green. So I don't see anything. I just don't see anything either technically or fundamentally. I would just stay away. So email, text, it doesn't have the name there, but I'm just going to say, I don't see anything. So I'm going to give it a miss. I can't give you any advice at all. I have mentioned before that I thought it was a great short. Now, is it a great short? I'd rather wait for this rally in the market to be completed. And if it at 19, if it can pop to 24, between 24 and 27, once again, it could be a perfect short. I just don't see anything there. Could be totally wrong. That's just what I see. So now I'm going to have a quick look at the TLT. See, the TLT is bouncing a little bit today. It's up 93 cents at 130.24. This is the Lehman 20-year T-bond fund. But the way I'm looking at this historically, can I get there? Oh, it's the wrong one. So let me just do TLT. Let me see what I've got in Chapman Wave by support and resistance areas. So 123.94 on the daily, all the way down there is the support. I've got lots of resistance in the 129.50s to 131.50 area, and that's on the daily. The 120-minute chart is looking at 129.83 is one support. 128.03 is very important support. No resistance levels, and the 10-minute chart doesn't have anything in the way of support or resistance. It's kind of free-ranging right now. So all I can say is that the way I'm looking at this, I would consider that bonds are in a trading band, yields are in a trading band, and it's just the Japanization of our bond yields, I think, is going to continue regardless of what anybody says. So that's what I wanted to get out there. And I wanted to talk about this pattern that I was looking at, the H pattern that can go to an M pattern, show it to you again right there. So when I'm looking, what's really going to be very important, even about the Dow at this particular point, look, you see that pattern of the H with another arch formation? So it's going to be very important in this methodology, Chapman Wave methodology. It's really important to close decisively above 16,510 over the next couple of days. I'd give it up until Tuesday. What's really important, it isn't just a close above 16,510. It is a close above 16,570. It has to break away from anything that resembles a magnet to the downside, like this 9-period exponential moving average, the maroon color one, and it has to start working its way toward this open area so that the 200-period moving average back right up at the 17,089 area. That is what you want to see. There's the pattern. That's what we want to look for. Otherwise, you're just going to have an H that goes to an M pattern. And I think it could happen. So then I can't remember if I even finished my the reason for putting this up. This, where was it? Yeah. So what I said today was, if I can find, let me move the one computer away. Let me move to the other computer. Here we go. Now, if I can get this, there you go. So this is what I show my subscribers every day. I give you right here. So I give you this. That's a very comprehensive look at the patterns of the Dow every single day based on the Chapman Wave methodology. I give you parameters. I say right here, 60. We need to close above 16,510. We went to 16,511, and we pulled back a little bit from there. We're at 16,423, actually, not a little bit, almost 90 points. And what's really important is that you want to break above it so you can start to challenge the 16,700's next resistance. And I give you different information about what to look for. Then the next thing is, when we're looking at this particular chart right here, then I give you my overview, and so early in the morning, 6:30, 6 o'clock, 7 o'clock, by then the daily has gone out, the Dow analysis, then the overview section. And I said, there's just one word. Everything's about one word right now, the VIX. And where's the VIX? It's under 22. It's at 2188. That's starting to say that it's improving. I want to see the VIX index under 22, and then I want to see the next phase of a rally, if there's going to be one, go into the 19s and then the 18s in the VIX index. That to me would be the best scenario we could see. You're already beginning to see that W formation here in the daily and a W formation in the S&P daily. The ARMS index is not giving us any information here. The VIX index made a peak E at 30.90 and it's pulling back. That's important. There's a lot of resistance here in the 120-minute chart of the Dow. I'll be back and we discuss some other things, some positions that we have, and I'll be back in a moment. Dow's down 35.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Yes, this is so. Mike just sent me something. USO immediately spiked down on that report, as last night it had spiked up on preliminary reports that they would be up. But Mike, I'm also looking at the USO at this particular point. Excuse me, trading at 878, unchanged. So if you look at this 10-minute chart, which I drew here with a resistance line at a peak G, it pulled back sharply, and it's given back the gains that were made from 11 o'clock yesterday. Was it yesterday or last night? Yeah, 11 o'clock yesterday when we were on with Greg. So the price is right there, holding very nicely. My thinking here is that crude oil, in a sense, will be dragged up more by the market itself, and maybe the dollar just not going anyway too high on the upside just yet. And that's the reason I think if you look at EUR USD, I was asked if I would look at that, made a peak F top in the Chapman wave and the daily chart. And these extensions to the upside have the characteristic of Eiffel Towers, and they say, hey, you start breaking key support and you're going to go into the most important candle on the left side, and that would be this candle in the euro of the 3rd of February, where it opened at 1.091 and spiraled up to 1.114 and then kept going higher all the way into the 11th of February, where it hit 1.13755. So this is going to be very important. I would just venture to say 1.055 is really key support in the euro. I think the way I'm looking at it, it's got a little bit of a pullback, but I'm suspecting that this candle here, this candle of the 3rd, I think the middle of this candle is going to be really good support to 1.100. And that's saying to me the dollar has fairly limited upside. And I am impressed with the way the gold stocks are acting. Is this a case where you say, oh, okay, I'm going to give up. I'm just going to grab them now since they've already moved? I have patience. I'm prepared to wait. If I miss it, I miss it. I don't want to be chasing a gold stock, even though there's a chance they've made an important low and they're not coming back to those lows for a while. But I'm not prepared to chase just yet. Other than to do the thinking is, as we did with one of the sectors that we bought last Thursday, got stopped out, went right back in Friday, did not get the second position. And it's a shame because I wanted to get out of one position today, or raise the stop on one and try to buy it back lower and keep the other as a core. Meantime, now we've got the other as the original as a core. Fabulous gain, big percentage, 39s to the high today was, if I can find it, I think it hit 44. Let me just double check. Yeah, it hit 43.79. I mean, that's nearly a 10% move in days. So it's good. So I'm prepared to, because we've got such a nice portfolio, I'm going to just have a little patience. But I do think that gold is showing signs here that something is going on. And that's why I cannot rule out another step, that arch formation, to do some retesting of last week's lows. But in the meantime, I'm treating this like I did before when I was treating the downside as where we want to go, because at some point there'd be a rally to the upside. Now I want to treat the rally to the upside as somewhere where I want to be. It's hard. I'm trying to avoid some shorts. Wow. Yep, that's fine. I'm trying to avoid some shorts. We do have a short, which I think is still active and good. I'm not 100% sure. I don't want to waste time looking at it. And if that's the case, what we're looking at here is a situation where I'm trying to be as careful as possible not to get on the short side, because I do believe this is going to be a real surprise to a lot of people if it's only an intraday consolidation and we make it like a doji close today. And the next thing you know, tomorrow is up. When options expiration week starts on a Monday down, very often Friday is down. When it starts on the way up, especially a sharp up, it's a big surprise. But sometimes the Friday options expiration can be to the... Are we done with the show? We're done with the show. I can't believe it. Stay tuned for Think or Swim. You've got a fantastic options generated show coming up here. And I'll be back with Tom later this afternoon. And so far, our long positions are holding very well. Let's hope it does that into the close.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,